Hello and welcome to Byju's Exam Prep IAS. Welcome to the big news. The topic for today's discussion, US Fed hikes rates. We will try and understand what is this topic all about. Before that, we have two important announcements. Byju's Exam Prep IAS is happy to launch the National Scholarship Test, which is scheduled to be conducted on 19th of June 2022. How do you register? Follow the link given in the description box. Give the necessary information and you would be able to win some attractive scholarships. This is the first announcement. The second announcement is in reference to the Target Mains 2022. Please do tune in every single day from 7:30 p.m. to 9 p.m. on our Byju's exam prep application. So what is that you have to do? Download the application and watch some of the distinguished lectures given by the faculty members of the Byju's exam prep. This should be in reference to the mains topic, and all the important topics from the mains perspective will be discussed as part of this initiative. Let's get started and try and understand what is this topic all about. What is the context? We have the United States of America's Federal Reserve, which has announced a 3/4 of a percentage point or a 75 bps hike in its target interest rate in what is seen as a move to curb the spiraling inflation. So what is this inflation all about? Why has the United States of America increased the interest rate? What could be the likely consequences on United States of America, and what could be the consequences on the world as well as the India? We will try and understand everything with respect to this topic. Now the first important question, why is there a rise in the interest rate? That is because of the multiple reasons. The central bank, while announcing the rate hike, said it is strongly committed to returning inflation to about 2%. As of now, there is skyrocketing inflation in United States of America, and as a result, what we are witnessing in United States of America is the slowdown in the economy. This has further decreased the activities in the United States of America, and the unemployment crisis has also increased over a period of time. This means that United States of America has to take some of the measures to bring down the inflation that is spiraling in United States of America. The 75 bps hike is key lending rate is the biggest since 1994 and was delivered after recent data showed little progress in its inflation battle. So in order to control the inflation in United States of America, what we have is the hike in the interest rate. What are the possible reasons for the inflation in United States of America? The primary reasons include Ukraine war and the China lockdown. What exactly is happening? We know for the fact that Russia had invaded Ukraine. Because Russia invaded Ukraine, there were multiple areas which impacted the global community. One, in terms of the food prices. The second is in terms of the oil as well. And third is in terms of the number of production units. The major factor being that Russia starts invading Ukraine, and all the exports that were supposed to have happened from Ukraine and Russia does not happen on the right basis. As a result, the first major point as to why there is inflation in United States of America happens to be the Ukraine war. We also know for the fact that we are currently going through another wave of epidemic as well. When you consider China, what is happening in China? China currently feels that there are large scale number of COVID-19 cases which is also increasing, and as China imposes lockdown, this also means that all those equipments, all those important resources, all those important manufacturing products which are supposed to have been sent from China to multiple other countries, including United States of America, is not reaching USA. As a result, what we currently have is demand supply issues, and this demand supply issue has also resulted in inflation in United States of America. The second major reason being the energy prices, including the record gasoline prices. So we have number of truck drivers, seaport slaughters, warehouses, which are all in shortfall, leading to cost delay as well as the rising shipping rates. So if the energy prices starts increasing, this will obviously increase every other price commodity as well, because the ultimate logistics is based on the oil prices. The added costs at every step from the production to the sale lead to price increases for the consumers, which is why what we currently have is inflation when we consider in United States of America. So what will happen because of this inflation? There will be issues with respect to the bond market. There'll be issues with respect to even the bitcoins and the cryptocurrencies as well. And what we are currently witnessing is it is inflicting a lot of pressure on the stock prices. In fact, the crypto assets and cryptocurrencies are also suffering majorly because of the inflation. So what could be the likely impact because of the hike in the interest rate? When we look at United States of America, the action has raised short-term federal fund rates to a range of 1.50% to about 1.75%, and Fed officials at the median projected that the rate increasing to about 3.4% by the end of this year to about 3.8% in the year 2023. So, and then we also have the Federal Reserve raising the interest rate. It effectively seeks to reduce the amount of money available for the purchases. So when the United States of America's Federal Reserve starts increasing what is called as the interest rate, people may not have the money as well. Money becomes more expensive to obtain. Financial companies short-term borrowing rates will also start increasing as well, and this will ultimately have a knock-on effect on almost all other borrowing prices, from businesses to even the consumers. It's also going to be an uncomfortable period because the inflation is currently running high. There is a lot of unemployment crisis, and this is further going to increase the cost of some of the products that are based in United States of America. As bills become more expensive, households will have less per income, where their bills become more expensive, and US inflation print has also impact on the global market as well. Since it has the impact on the global market, business sales and earnings may fall, and consumers have very less discretionary spending money. Existing bond prices will also plummet instantly. Existing bonds will lose value as a result of higher overall rates, making their lower interest rate payments more tempting to the investors. So what we have is the US inflation has a major impact on the markets globally. Higher interest rate on the market might be detrimental to the stock market world over, and this ultimately means that consumers in United States of America may have problems for borrowing, and at the same time, because of this hike in the interest rate, the global commodity stock market is also bound to suffer. What could be the likely impact on countries like India? The higher interest rate in United States would cause foreign institutional investors to pull out from some of the developing countries like India. The rupee dollar exchange rate will have a negative impact, causing the rupee to depreciate. And since the rupee starts depreciating, this will mean the prices of oil and raw material imports will also get expensive. This also means higher imported inflation and manufacturing costs, as well as the increased retail inflation as well. Ultimately, when more dollars are pulled out, Indian rupee also gets depreciated as well, and ultimately our imports will become costly over a period of time. As we also discussed, when we have these people pulling out of the Indian market, we also have the FIIs who will pull out a lot of money, and when they pull out a lot of money, the stock market is also expected to bleed. So we have discussed in our CNAs as well, we have discussed in our past as well, that when FIIs withdraw from India, the stock market is bound to bleed, and people may suffer because of this withdrawal. So will this attempt by the United States of America's Fed Reserve be successful? As of now, it looks like it may be, but on a longer term, it may not be successful as well. Why? That is because it is not to do with United States of America alone. Most of the countries are also suffering inflation. That is because of the pandemic related issues. That is also because of the shortages of the oil. That is because of the shortage of gasoline and food, all propelled by Russia's invasion into Ukraine. So United States of America would not alone be able to bring a control on the inflation. Added to it, we also know for the fact that because China is also facing what is called as the epidemic related issues, there can be global supply chain issues, labor shortages, and as a result, what we will be witnessing is that this inflation may continue to persist, and United States of America's Fed Reserve alone may not be able to bring any impact. So what is the way forward? As of now, we have United States of America's Fed Reserve, which has taken initiative as well. We also have other central banks world over which are trying to bring control of the inflation, but they alone would not be able to bring a check on the inflation. What we require is the global geopolitics also being kept under the check. We have Russia-Ukraine war. This should be immediately neutralized, and this should be ultimately reduced, and over a period of time, all the volatility that is existing in the market will also reduce, is what is this article all about. It is this that we have to understand with respect to this article. So this is it for today. Thank you for watching. All the best.